And today we're going to talk about recent developments in wheeling in South Africa, and we have 5 speakers as per the
I want to say, so we're close to the
Sorry, could you please, George, can you mute yourself, please? Thank you. And we have 5 speakers. I'll let each of the speakers do a quick introduction of themselves just before the presentation starts, but their respective presentations. But really the topics we're going to touch on are recent developments, where I'll be touching on what we've seen happening and some nuances in the market. Shirley's going to touch on NECOM wheeling framework, a little bit of virtual wheeling. Keith's going to touch on the multi-market model and some of the standard offer recaps. Felekis is going to touch on some of the private PPA impacts and what we see moving. And then Josh is going to round up with hopefully for some good news on municipal wheeling, because we know a lot has been progressing over the last couple of months. If I'd ask everyone to stay on mute, I'm going to be the sort of facilitator as well as speaker. If you have questions, please put them in the chat. Each of us plan to do more or less a 7 to 8 minute slide. So that's about 40 minutes of death by PowerPoint. We have about 25 slides between us. And then we're looking for about 20 minutes of questions. So I will then ask the questions. And if your question is not clear, I'll just call out that person and ask them to elaborate accordingly. The session will be recorded, or is being recorded already. So it will be available for those afterwards to make sure, check on all our faux pas, as well as for those people who couldn't join. Thank you very much. So this is part of the decarbonization sort of strategy webinars that Cresco has been hosting. We did 10 last year. And really the focus of the presentation that was done here was really around what did we do in 2021, what were we doing in 2022, and what are we doing 23, 24 going onward. So very much initially we were focused on, Shirley and Keith, this is our 3rd or 4th webinar together, looked at the long-term pricing, what's happening with EPCs, very much then onto BESS and all the relevance there, touching on long duration energy storage, which we're all looking forward to when that'll come out, and Dominic Gonzalez from Cresco was involved in that, and obviously REX, which is becoming to get a lot of interest, and we plan to do a carbon and climate webinar in a couple of weeks with Andrew Gilder and Robbie Lowe from Prometheum. And then we started touching on the more subtle stuff that's still early stage, is energy transition, asset cycle, recycling, mine closures, where from here, the battery storage, we had the John Cockrell team, obviously thermal and engagement there, and with the Wadzilla team, and Cresco is very proud to announce that we were involved in the MTN project that was recently announced to do a fairly large-scale hybrid by South African examples, using on-site gas, diesel backup, PV, and BESS being implemented hopefully by early next year. And then we started touching on nature-based solutions. Sandy Jackson from BFAP was very engaged with that. And then Keith touched on the multi-market model. And I think today is really to what's happened since then and where do we see it going in terms of timelines. The idea is not to repeat the presentation previously, but I know those other more detailed presentations are available. Thank you. So I think the first thing is the definition of renewable energy penetration has definitely moved over time. All of our clients have renewable energy targets with different dates attached to them. Some go up to 100%, good luck, and some are more realistic. But what we have seen is that people are looking for that next level of granularity around renewable energy penetration. And an example here is where Google in 2070 announced proudly that they were 100% renewable, and people clapped briefly before saying, well, that's not technically true, because because you bought more RE on the virtual market than you're using, that doesn't actually mean you're 100% renewables. So Google went back a bit with their tail between their legs and then came out with an energy source audit, which is the middle slide here, where they looked at their data centers in the US. I'm just using Google as an example. There's lots of other company examples there, and they stratified based on their locations. And as you can see, Iowa and Oklahoma, that were close to the Great Lakes, lots of hydro, they were very renewable. Texas and South Carolina, largely driven by fossil fuels, were not so renewable. And so the concept of 24/7 carbon-free energy has become a lot more relevant. And for all of our clients now, as part of the energy intervention, we calculate similar to the clock on the right to say, when are you, with traditional technologies, getting to in terms of the time of use clock or the hour of the day clock, and where else do we need to go to try and facilitate this over time? So this has really become a backdrop to a lot of the wheeling deals in terms of granularizing the tariffs and the approach. Now, on the left, we have really a customer type of load categorization. Unfortunately, we don't have data on everything, but this is the theoretical demand from these type of clients or type of loads. And as we're aware that the wheeling regime is really outside of cogeneration that's been happening since 2004 with the existing sort of paper and sugar projects, is largely been driven by the EIUG clients, and I'll touch on the right. We're now seeing larger user clients, not EIG, also getting involved with a few deals announced. And then I'd say the commercial property space is probably more advanced than even the EIG, because traditionally they've had rooftop solar, and they've now been putting in BESS, and as well as potentially now the ability to sell excess energy in the grid. And slowly we're seeing smaller municipal clients come on board in terms of, so everyone is sort of, we don't do much in the residential and the government space, but really everyone is now running, have procurements on the markets or unsolicited bids, and there's very few clients who haven't actually stepped into the concept of wheeling. Now, I've tried to be a bit coy with the names and the sectors, but I'm sure we could allocate colors to a lot of these companies, and we really have, in our view, 4 types of engagement levels there. So we have the ones that have sort of initial market engagement, where we sort of start on RFPs, trying to understand where that is. And that's obviously where Cresco has been very actively involved. And I think we have probably 200 projects in our database in terms of financial models, and at least 300 from a permit readiness or shovel readiness test, although we have yet to have one common definition of what that means. I think we've seen a lot of RE procurement progress, and many deals signed. We obviously have the Sabanias and the Harmonies and the Tronoxes and the Sassels, and I would hope by by Q1 next year, we probably would have hopefully about 1,500 megawatts of large-scale utility projects under construction. Unfortunately, a lot of these will only be online sort of end of 24, maybe 25, but it is substantially more progress than we had a year ago if we had a similar slide where most of these projects would still be sitting in PowerPoint or Excel. And then we've seen a marked move from just pure procurement to doing a lot more work around the energy strategy, especially when you start getting higher penetration levels. And there we've seen a lot of focus on on-site and BESS. And for many clients now, subject to their load and their geographic location, in some cases, security of supply is actually above decarbonization as a priority. And that obviously comes with different technology, different interventions, and potentially different procurement structures. And so that's what we were doing sort of the year before last year. And then what is really happening forward is the whole push into the off-grid market. We've seen Africa increase. We've seen wheeling within the Southern African power pool increase in terms of appetite, hoping to see a few projects achieve financial close on the merchant side. And then we have the whole multi-market model and potentially an energy co, IPPs partnering either formally through joint ventures or informally through different versions. But I would say the market is moved materially from where we were. And if you did a NERSA generating license slide, which looks like a hockey stick, I think if you did a similar slide on what we've managed to achieve in terms of actual projects in the ground in the private sector space for wheeling, it's a pretty similar hockey stick. Maybe not close to the megawatts that NECOM and other people are saying are achievable, but where we're sitting, I think there's been a huge amount of progress, and I think we have to thank Shirley and Keith and various other participants for making this happen and possible. Now, where have we really helped our clients in the past was initially, as I've mentioned, offsite and wheeling, which is the purpose of today's discussion. This increasing push for on-site generation, linking into the energy strategy work in terms of how does this fit within a bigger plan. These obviously push between cogen, BESS projects, and touching on ESG, although not really significantly now. I've mentioned the cross-border wheeling is of interest, and I think Cresco was quite excited to hear the Minister Ramaphosa announce that they facilitated a cross-border wheeling deal with a dispatchable technology in Mozambique to a mining company in South Africa. We're not close to the details, so I can't speak about it, but for me, it does create the interesting opportunity Two concepts. One is obviously accessing generation north of the border, and for decarbonisation purposes, hydro obviously is important. And secondly, the concept that if you can buy dispatchable technologies, and even if they are wheeled, there could be an element of security of supply for the generator, because to date, wheeling unfortunately has not resulted in any security of supply. Conscious if there's no electrons in the grid, there's not, but in terms of prioritization, we've then seen going forward, the push ESG and carbon is now on steroids. This whole push into jet projects, slowly coming. We're starting to do a few pre-feasibility studies. They're still quite away from being financed. And then what we've also seen is a push is this whole carbon off-grid, but then diesel optimization. Unfortunately, everyone's chasing the same liter of diesel, which is not going to Ankerlig and Cresco. And then initially a focus on green products, but now very much the aggregator model. And there's a number of traders and aggregators who are offering a slightly different solution from the traditional bilaterals, which I think fits very well with a lot of the smaller loads and in terms of their requirements, where they can't take on a full utility scale project. But that is where we're working towards. And then alongside this, we obviously have the fact that while technologies are being implemented, we have the multi-market model, the wheeling sort of functioning model, and where does BESS play in the equation. And so a lot of the work now we're doing is around large scale or medium scale BESS interventions. And if you just look at what's available in the UK market, you can have up to 50 different products.
Rob, you're on mute. You put yourself on mute, Rob.
How much did you lose? Thank you.
About 5
Not sure
seconds.
I did that. 5 seconds. Okay. Thank you.
Of your dulcet tones, my friend, of your dulcet
hello, Mark.
tones. We missed that.
Right, thank you. He's got the James Earl Jones voice today. Thank you, Mark. And I guess that the big push is in terms of long duration storage to allow us to move from peak shaving to meaningful interventions. So really that is my slide and where we see the market going, and lots of interesting developments. And as I mentioned, I think we've moved from still helping on large scale procurement, now getting a lot of these projects to financial close. Tariff adjustment mechanism and swap rates, that's a different discussion, causing some complexity in the market, but now off grid or at least partial grid and around load shedding is definitely a huge focus by many of our clients and focus from the Cresco team. Great. Thank you very much. I'm now going to hand over to Shirley. Thank you very much, Shirley. You can pop on your camera and say hi. Thanks. You're on mute, Shirley. Thank you.
Yeah, I just realized that. Good afternoon, everyone. So I was asked by Rob to maybe just share a little bit with what's happening in the NECOM space around wheeling. So if we can just go to the next slide, I'm not running it. So under the NECOM process, it was identified that there's no national wheeling framework. There was a document written by the regulator around about 2011, 2012. The world has changed since then, and there's a need for a consistent approach that has to be followed regarding wheeling. So under the NECOM Workgroup 9, there was the intent to develop national rules that are managed by NERSA, and that these can become a license condition to transmission and distribution licensees via the NECOM process. And we've picked up that everybody's doing different things. There's no clarity around what NERSA needs to approve. We've seen different decisions that don't necessarily align. So the purpose really was to put out a document that says distribution and transmission licensees need to provide non-discriminatory access. There are charges that need to be raised, and how this wheeling can be dealt with on the account. So the process that was followed is firstly with a small group of experts were put together and a draft document. And then there was sort of an expanded workshop held together with Eskom, AMEU, Municipality, Salga, and other industry experts to sort of come up with a draft document. The process now, because there were some issues raised where there were differences in terms of legal opinions on some of the issues, So there's work being done to look at the legal aspects of the documents. And once they concluded, this is going to be submitted to the regulator, and the regulators then needs to make a decision on what they want to do with this document. The NECOM process feels that it should be part of a regulatory document so that there's consistency and standardization that is applied in the industry. Next slide. So have we just jumped a slide? Just check. Just go back, please. Okay.
Sorry, I'm just going to restart this PowerPoint while you talk. It got confused.
Okay. Yeah. So I think one of the issues here is, what is this document meaning to achieve? There is a purpose. Not so. Next slide. If it, no, I don't know. It's missing something. Anyway, what we're saying is what the document doesn't deal with. The document doesn't deal with how charges are raised, because that's already in the tariff code. It doesn't deal with things like debt. It doesn't deal with the exact accounting mechanism to be used. It deals with the principles. So it's not prescriptive on certain aspects, but it definitely says that wheeling needs to be done in terms of a policy that must comply with the rules, etc., etc. Then, as not part of NECOM, but as part of Eskom, there's been some work being done on what we're calling virtual wheeling. You can just go to the virtual wheeling, it's fine. Yeah, that's...
These are your slides, yeah.
Yes, yeah, what it doesn't, just go back. I don't need to go in the contents. So what it doesn't cover is, as I said, how those 3 points I've already touched, and that there's bylaws and there's flexibility built into this. We can go back to your presentation on virtual wheeling. It's fine. Thanks. So as part of the work that's been done, we know that we have what we are now calling traditional wheeling. Next slide.
Sorry, my computer's not loving things, so please excuse me while I quickly...
Okay, not a problem.
Apologies.
So while we have what we call traditional wheeling, and traditional wheeling is really where there's dedicated parties, a generator that might be selling to 1 or 2 parties, or 1 or 2 generators selling to a few parties, where you have sort of a traditional arrangement in place. You know, this works, and it's part of the current process, and you know, it's evolving into even a portfolio of wheeling. But what it doesn't do is it doesn't accommodate when you have lots of smaller customers. And I just want to emphasize, this is not part of the NECOM process. This is really how the accounting mechanism would work. So what we've recognized, where you're getting sort of corporate entities or traders that are selling to many small customers, to do this under a traditional wheeling approach, where you measure what the generator produces, at least for Eskom, and you do some kind of reconciliation on the account, this is not going to work. So we're looking at a virtual wheeling mechanism. So instead of this doing it on individual accounts, you do it sort of on a virtual account. So the important thing is...
Sorry, Shirley, can you see the screen? Is it working now?
Yes, it is. Thank you very much.
Thank you.
So how it's going to work is the individual accounts will pay their normal bills. There's no adjustment done on those accounts, but there will be a reconciliation through a platform, and through this platform we'll measure what the generators produced, or we'd get data what the generators produced, what the off-takers consumed, and a consolidated refund is processed. And this is done through a virtual wheeling contract, and not as Eskom currently does it through an amendment to the supply agreement. And we do, by the way, on our website now have information on www.eskom.co.za/tariffs. If you click on the wheeling button, you will actually see a little bit more information on the virtual wheeling. Next slide. And I'm not going into detail on this one, but really what it's saying is, if you look at the bottom there, you'll have generators who are sellers. They'll be selling to a buyer. This buyer could be a corporate entity, a trader, whomever. They would have their data and their databases. That database is then going to talk to an Eskom database or platform. And from this, we're going to affect a wheeling refund. On the right-hand side, you'll see that the settlement between the buyer and the off-taker, or the end buyer, if you want to call it, or end-use customer, is between those two parties. The allocation gets done between those parties. We don't get involved in that. We just provide a single refund, and the buyer, whomever that is responsible for the off-take. So I just wanted to introduce the concept on virtual wheeling. What I do want to mention is that this is still a proof of concept in Eskom. So we are looking at all the different functions that are going to be needed to affect this, and setting and the development of these platforms. The platform, what we do want to mention is that we want to create a platform that any other party's platform could talk to ours, so providing the protocols on which they would talk. So it's not going to be a platform that will accommodate only one party. So if you've got 5 traders and 10 corporates, we will just set the conditions on which their platforms will talk to ours. And the other thing is I want to mention is that this will accommodate customers beyond municipalities, but those customers will be paying the municipal bill as normal. It doesn't affect that. We would just need the consumption information on this. And the condition is that all the parties would need to not be in debt to Eskom. Thanks. I think.
So I have a few questions just on this point, so maybe you can just clarify. So my understanding is virtual wheeling is not required to do the current wheeling deals that we're talking about at the moment. The deals that have been announced, that will just be under the normal Eskom wheel process that's been working for a while. So agreed. This is really to facilitate lots of complex transactions, specifically within a municipality.
Well, even Eskom, lots of typically low voltage connected small customers. So you could have a corporate entity with 1,000 points of supply across the country. You can't really do that in virtual wheeling. I mean, traditional wheeling. So you need to create a mechanism, but it doesn't impact. Traditional wheeling will still be a product.
Okay. And then if we had to put 2 questions in terms of timing. One is what we think, how long it'll take for NERS to come back on NECOM, and you can obviously say if you will answer that question or not. And then just gut feel to create a wheeling platform, set up the IT, get it all integrated. I mean, for me, this is probably 2-3 years away from being actually implemented at a functional level. Cape Town municipality has spent a number of months now fixing their back office support, and that sort of stuff needs to work properly before you can put this in at scale. I don't know if you have any comments on that, Shirley.
So under traditional wheeling, as long as it's been done with larger customers and larger generators, that's not an issue. We already have a system that does that. We are looking at automating it going into the future, but that's not going to stop us offering this as a product. For virtual wheeling, we are going to have to create that integration layer, and talking about our billing systems and things like that. So that is under development in our IT space. I don't have timelines for that. If you'd said, when do you want it? I would say in a year's time, I would hope everything is sorted out, that we can start working on this. I think everybody is aware that we have partnered on on this integration. But the actual Eskom aggregation platform database, there's still lots of work being done in that space on whether we can use existing licenses of products we have, whether we need to go to market, the architecture on that, etc., etc. That's all under development at the moment. So I don't have an answer on the timing for virtual wheeling, but for traditional wheeling, we can do that at the moment.
And then just to take traditional wheeling further, so if you have a client with sort of, these are all transmission connected customers, large scale, say 7 loads, and then you maybe over time will have 5 or 6 generators come online. Are you set up yet to be able to do that in terms of cascade the energy? If there's an unplanned maintenance event at one of the loads, and it's already set up in the amendment agreement, so it's pre-set up, does Eskom have the ability to cascade, maybe not real time, but with some element of short-term time around to other loads, to not have excess energy risk in the system in terms of the loads time of use demand being less than the generated time of use demand supply?
So under the traditional wheeling product, if you want to call it, we would have it typically the one-to-one kind of thing, but we're also looking at what we're calling portfolio wheeling, which is exactly what you've described. So there's good work being done in that space as well, which will allow allocations to be done day before kind of thing. Yeah.
Brilliant. Okay, cool. Thank you. I'm sure there's lots of questions, but conscious.
If there is more information needed, and maybe for the next webinar, I could ask my colleague, the colleague that's working on the portfolio wheeling, to also present that. So we can do that at the next one. Yeah.
Yeah, I think that would be very helpful, because I guess that's the next level of risk mitigation and projects we're seeing. Thank you.
Yeah.
Cool. Hoping my PowerPoint continues to work, but thank you, Shirley, for your time. We're going to pop Keith Bowen up as the next presenter.
Great. Thanks, everyone, and thanks for that, Robert, and welcome, everyone. So I'm going to be talking a little bit about the standard offer program and the emergency gen program, and then also go into a little bit about where we are in terms of the market, multi-market model and developments around that. So I think I have spoken, and probably most people have probably heard about the standard offer. The standard offer is now sort of in operation. We have all the permissions we need, and we've started to buy under the standard offer. The idea of the standard offer is that we allow for that Eskom sets a price, and there are 2 pricing options. One is the static price option, and the other is a dynamic price option. And those prices are then set by Eskom, and then anybody can come and offer to sell at those prices. There are obviously some minimum conditions in terms of being able to enter into the program, but there's no long-term procurement. There's no commitment over multiple years. It's just basically setting a price. At the moment, our current regulatory approvals for the programs runs till March 2025, so we are able to sign contracts up till that period, but we have asked to be able to sign contracts to July 2028. So that gives us a little bit more certainty to be able to buy the energy over a longer period of time. But that price is not set in the contract. What we do is that there's a static price option. The prices would change every year based on the regulatory recovery for Eskom, and we adjust that price almost like we do for tariffs. So tariffs that we sell at, we would also adjust the tariff that we're buying at under the standard offer program. And you can see there for FY24, the price that we're now buying at on average, it's a 95 cents a kilowatt hour, but with a peak standard off-peak structure is very similar to our sort of megaflex structure for energy. The other option is the dynamic price option, and this is set every day based on our internal, what we call the Eskom dynamic energy market. Is where our generators essentially bid against one another to be able to supply. Obviously, in a tight situation that we're in now, we're pretty much running everything, and including the peakers, which means that the prices are set quite high. We just have a cap at those times. At the moment, the cap is R1.50, just over R1.50 a kilowatt hour. And then that's the price that we would buy the energy at for people opting for the dynamic price option. Anybody who signs on to that program, they can choose between the two options, and once a year they're able to exercise. So every year we will announce the static price, and then anybody on that contract can then decide whether they want to switch to the dynamic price or stay with the static price option. Generally, on average, the static price looks at our average cost of generation over time, over the year, and we then pay based on that average cost. The dynamic price option then looks really at the marginal cost in every hour. So generally should be higher, but obviously with the cap, it's kind of limited as to how high it goes. But it's just really reflecting the status at any particular point in time. The interesting thing about the standard offer is that we really are not committed from the perspective of the generator or the customer that's selling under the standard offer. The commitment is really that if the energy is available, we would buy the energy, but we can also work as a backup that for people who are wheeling across the network, they are supplying to customers. We are there as a backup to absorb that energy if, for whatever reason, the customers can't take the energy or they are producing more than what was expected, that we then, the standard offer provides that stopgap to be able to purchase that energy and avoid curtailing generation in the type of environment where we actually need more generation on the system. So that's really the focus of the standard offer. And if we think about where we're going with the multi-market model, to some extent, the standard offer is a precursor to a balancing price, because we're basically saying the price is set by other market conditions. And if someone is offering something, then we would buy it at the balancing price. Theoretically, also, if they not able to supply, they would have to buy at the balancing price. But it's kind of where the standard offer is heading in the long run. Robert, if you can move to the next slide.
So Keith, a quick question while we're on the pricing. So as I mentioned, a lot of the projects we're involved in now are on site with significant BESS interventions, but there's always an element of excess energy where you're oversizing, especially if you're on the Western Cape where summer's amazing, winter's horrendous from generation point of view. So for a typical feasibility study, assuming you can sell this excess energy, which you can, what would be a guesstimate of a long-term, say, a 6 to 8 year price, if I put you on the market spot there to use?
I mean, if we think about the crisis that we're in, it's likely to be here at least in some form or another for the next couple of years. So that average price is likely to increase rather than decrease over the next couple of years, particularly as Eskom gets a certain revenue recovery. We essentially, our average cost of generation is increasing. We would then pass that through. But potentially after 3 years, hopefully we're starting to get out of the crisis and our marginal cost of generation is no longer the peakers, then we might see that price start declining again. But you can be pretty sure that over the next 2 to 3 years, that price is definitely going to be on the upside rather than down.
Perfect. Thank you very much.
Cool. So then under the emergency gen product is a slightly different product here. It's all about people with generation that they can sort of predict and where they want to trade that available energy into the future. And this really is sort of more where we're heading to in terms of a day ahead market. We do allow right now that we have a month ahead and a week ahead option, really because a lot of the participants that we're looking to sign on to the emergency gen program are using cogeneration or other gas or other mechanisms where they have to include it as part of a longer term plan. And it's not just, they're not as flexible as a day ahead option. So we've allowed for additional flexibility from our side to encourage more participation in the program. But here the price can then go above the standard offer. So the standard offer really is reflecting where prices are moving, but that it's capped at the R1.50. If you've got someone who has gas or is a cogen plant and they can offer that, they bid it in at the price that they want. If we choose to take it as Eskom, we would run a schedule on the week ahead and the month ahead options. Obviously, we do production planning with a forward look. If this additional generation would actually lower our net cost, then what we would do is say, yes, we would then take the energy. If, however, it's too expensive and it's not going to improve our cost position, we would just say no. So what it does is it creates a mechanism So there's a contract that's signed for 2 years. Again, we also have cost recovery through to March 2025. But every day, every week, or every month, we get to decide whether we take the generation based on the offers that are made. So it gives some flexibility, but at least we have this underlying contract against which we can pay when the energy is delivered. And that's definitely moving sort of more into that day ahead kind of space where people are offering the generation. At the moment, we are focusing on people who have existing, or companies that have existing generation that is not being utilized, because obviously the fuel cost is way higher than Eskom's average cost. But from our perspective, we're now burning diesel to supply that energy when it actually would be better for us to be using the cogen or the gas or whatever those options are. So we're trying to open up the market that little bit.
So
Yeah.
a question here quickly. So,
Yeah.
And this comes to forecasting. So as you mentioned at the moment, most of this is sort of mid-merit or semi-dispatchable technologies. So if you were having non-dispatchable technologies and you need to, you obviously have to have some accuracy in your forecasting. This is linking to the multi-market forecasting later. How would that work? Because you can actually only probably, with a huge amount of accuracy, forecast the day ahead. Month and week is a bit more guessy. So, and if you say you can produce and you don't produce, is there a penalty in return?
Okay, for the emergency gen program, we don't have penalties at this stage. So if someone has offered something and then they don't supply, we don't penalize. If someone offers something and they supply more, there's an option to buy the additional energy, but at the day ahead price, the standard offer kind of price. But we do not penalize right now under the program. When we get into the multi-market model and the day ahead, we don't have a week ahead or month ahead under the multi-market models, only day ahead. So if someone then has to predict their output, they supply it into the market, they bid, it gets taken. If they don't deliver, then balancing would apply, because then you are dealing with the issue where someone else has to supply that. But right now, in reality, for the emergency gen program, is that we, if we don't have that energy, we're going to be burning diesel, we're going to be load shedding. It is a problem, but we're actually willing to accept that as an output. So for us, it's just, we're trying to encourage rather than build in a penalty system. But in the future market, you would definitely have a penalty system or a balancing system to ensure that those people who are offering are backing that up in some way.
Perfect, thank you.
Yeah, if we go to the next slide, it's just really to kind of indicate the importance of why we're moving to these kind of programs. As I said, we have this internal dynamic energy market where we have bids and offers, and we're scheduling according to that. But, given the Eskom system, we've got a lot of coal fleet, which are all, relatively cheap. They go up to like less than R1 a kilowatt hour. And then there's nothing until we get to the peakers at, 6, 7 Rand, whatever the current diesel price would be. So the idea then is that you want to try and fill that gap. And we know that capacity is there. It's about trying to find the ways to get that capacity on the bars so that we can, move the supply curve out a little bit, and then everyone benefits from the lower price. I think, this year is a good time to talk about, where we're going in terms of the market. I mean, our biggest thing is that we're waiting for the Electricity Regulation Amendment Bill to be tabled at Parliament. It has been approved by Cabinet at the end of March, but it has not yet been submitted to Parliament. Once that is there, it kind of starts setting the ball rolling in terms of the final approvals and for that to go into effect. But parallel to that, we need to start working on a market code or the market rules that would apply once that the market operator is in play. So the Electricity Regulation Amendment Bill sets up that there's going to be a transmission system operator, which has a market operator component and a central purchasing agency component. But the market operator has to operate a market, and that's quite well defined in terms of the day ahead, the balancing, and those sort of components. But what we need to do is then work on the code. We have a draft code that has been worked on for the last couple of years. And it's now a matter of just like cleaning out a few things and then starting a process to discuss with industry and the various players around what that market code should look like. How does balancing work? How does the day ahead work? What happens with physical bilaterals? How do people become participants in the market? What do we do with disputes? All those kind of rules that kind of need to be ironed out and needs to go through a process. We think, or I think, over the next 6 months, we would have regular workshops to kind of then can deal with specific issues in the market code, so that come the end of February, hopefully next year, we've kind of got a sense of what the market rules should look like. Then when the bill is there and it's passed, we can go to the regulator and start a regulatory process for approval to get that turned into a market code. So yeah, it's still a lot of balls in the air. We don't know when the bill is going to Parliament and how long that's going to take, but we hope to run the process in parallel so that and the regulator would then be comfortable with the process that's kind of led to the formation of a code. I think one of the important things before I move on to the next speaker is just really talk about balancing. There's a lot of confusion between the concept of reconciliation, which is what we do in wheeling right now. So the traditional wheeling program, we reconcile the energy produced with what is consumed. That's quite different from the concept of balancing, where balancing is what happens between where you account for the difference between what was declared day ahead and what actually happened on the day. And the system operator is more focused and interested in the balancing, because you want to make sure that people are declaring what they're going to do so that you can schedule around it. Whereas reconciliation is more from the retail perspective, making sure that when you are allocating energy to your customers, you know where the energy is coming from and that it's accounted for. Sometimes we do get the two mixed up, and there's obviously a relationship, but it is possible that with reconciliation and with the development of wheeling agreements, we might have to start doing balancing, because we're adding on a lot new generation. The system operator is getting uncomfortable that all this energy is being delivered, but you don't have any kind of sight of it. So it might be possible that we would do balancing agreements before the market is in place, but that is a completely different sort of setup to reconciliation that we do in wheeling right now. I hope that kind of answers some of this.
No. So Keith, maybe two quick questions there. So one is, hopefully if the stars align and not unrealistic, we could potentially have call it the over-the-counter balancing market by beginning of 2025, end of 2025. Would that be fair? Sort of 18 months time?
Well, to some extent, we already have an over-the-counter market. I mean, that's what the physical bilateral, the wheeling arrangements are already over-the-counter. We just don't have the backup of the balancing in place. So yes, you might have a balancing process, and even long before then, to account, so there's accounting for what was expected versus what was actually delivered, and that might happen long before 2025. But what we're working towards is an exchange-traded, centrally cleared market mechanism with a day-ahead market, which might be in place by then as well. Given that, and again, it might be in place, but there would be a transition. Once it's in place, it's also dealing with hedging around the day-ahead prices to ensure that, to some extent, there's still a process where we liberalize over time rather than a big bang approach.
Okay, and I mean, a lot of the issues we're having on the PPA, and Alex will touch on them, is around forecasting of generation and obviously forecasting of the load. And I just want to use the quick following example, and maybe you can tell me if I'm overthinking it or not. So you have 100 megawatt hours that you have forecasted as a load for 12 o'clock in the day. You've achieved 50% renewable penetration at that time. So 50 is going to come from wheeling, and therefore you only want to buy 50 from Eskom theoretically. Okay. The sun doesn't shine on that day and you only get 25. So you're still getting the 50 from Eskom, but you're 25 short. My understanding is that the load who's forecasted that their obligation to only take 50 from you needs to go into the market and buy the 25 in the market to make up the balance potentially. And that might be at a very cheap price, because hopefully 12 o'clock energy becomes quite cheap. If you use that same analysis at 6 o'clock in the evening and the same scenario happens, if you go into the market, you might have to pay either peak tariffs or call it the alternative cost of dispatchable, and you showed on the slide 7 Rand. But that is all a risk that the load has to take. Am I overstating it or understating that concern?
Yeah, I think at this stage it's pretty much an overstatement. So before the multi-market model is in place, the retailer does that balancing already to some extent. The retailer takes on that balancing risk because the retailer is making sure that they can back up their consumers. If you've got a consumer that wants to be a full market participant, then they are balance responsible, and in which case they then take on that risk. They have to manage what they forecast versus what was delivered. But if the problem is with the generator, then the customer doesn't have to worry. So if the customer said they're going to consume 100 and they thought that 50 of that was coming from a generator, it's the generator that has to ensure that they are producing that. If the generator is out, the generator deals with balancing. Obviously, they may pass that risk on to the consumer through the PPA, but you have to differentiate who's the balancing responsible party, if it's the generator or the consumer. If the consumer consumed their full 100 megawatts, they are not out of balance. It's the generator that's out of balance. And if the generator then has to make up the shortfall, then the retailer doesn't matter, because what was promised day ahead has now been delivered, and the balancing the system operator has ensured through the balancing mechanism that that 50 has been delivered. So it's quite important to look at that from each party who is responsible.
Yeah, I think in most cases we're seeing that generating risk being pushed onto the load in some way. But no, thank you very much. Cool. Thanks,
Yeah,
Keith.
cool.
I know we could probably have lots of discussions on this, but we'll run into to Alex next. Thank you very much.
Cool.
Hi, everyone. Thanks for joining us today. So I'm Alex Felekis. I'm a counsel in the projects team at Allen & Overy. We're a group of 15 lawyers advising on energy and infrastructure projects throughout the continent. And we've advised on a variety of wheeling and behind-the-meter private generation projects. And what we're going to touch on in the next few minutes is the contractual and legal considerations that have to be considered based on the changes that are coming to our market. So we're in quite an interesting time, because most of the participants on this call, in some way or the other, are negotiating private power purchase arrangements at the moment, and we're negotiating them knowing that a few fundamental aspects will change during the term. So firstly, let's discuss the fact that the monthly recon for wheeling, in terms of when Eskom actually undertakes the reconciliation and passes the credit, is likely to move to an hourly recon. Keith, maybe I'll let you, just when I'm finished my section, just talk a little bit about that in terms of timing. So what we do know is that Eskom will honour executed amendments to electricity supply agreements that provide for monthly reallocation. But if one buyer continues, obviously, to buy renewable energy from other IPPs that are then reconciled on an hourly basis, there will be excess energy on that buyer's account. And then obviously the key question becomes is who should bear the risk for that excess energy? So what's also just really important to keep in mind is that monthly banking, as it were under the traditional wheeling model, has actually been a key risk mitigant in terms of buyers' consumption risk. And this would be diminished if we move to hourly reconciliation. So how do we deal with this? I mean, should it be a shared risk? I think on sale, so either through the standard Eskom programs, or potentially to other buyers when a buyer is constrained, become key mitigants, I think, that the market needs to look at. We're also seeing that when it comes to hourly recon, you have buyers wanting to actually understand hourly generation over the 20-year term, so that they can actually take a view as well. Load shedding. So we know that load shedding is going to be our reality in South Africa in the short to medium term. And obviously, if you're contracting with a buyer that does not have a preferential arrangement with Eskom, this is a material risk to that buyer's savings. When we look at practical mitigants, obviously what's being considered is insurance, backup generation, and again, the seller's ability to sell to a third party if it is the buyer that's constrained. What's also really important, I think, for the market to understand is the buyer's ability to bank that energy with Eskom if the reason that the buyer has not consumed is due to load shedding or a network event. But what's really clear from all of the negotiations that we are involved in is that basically, if this isn't a shared risk and the buyer doesn't take some of the risk here, it is becoming a key bankability concern. So we all know that our electricity sector will be restructured from a vertically integrated structure to a horizontal competitive structure, and that it will happen during the term of the PPA. The good news for private generation is that we know that direct supply agreements will continue to be in force, and they'll continue to be a feature of the market. What we don't have at the moment, though, is the market rules that basically tell us basically how dispatch or competitive price will occur. So what becomes really important in the PPA drafting is that the change in law provision is it's a robust provision that deals with obviously increased cost or loss of revenues, but also deals with a situation where a change in law actually results in a change to risk and reward for the parties. And then what becomes important to consider is when is terminating the PPA in that context fair, and in terms of which change in law can an expert actually make a determination that could be binding on both parties. We know that the Megaflex structure will change. We know that Eskom will unbundle the Megaflex the Megaflex tariff, and we also know that the WEPS rate will change. That basically makes up the buyer's rebate. A key consideration at the moment is how best this is regulated under PPAs that are being concluded now. What we are seeing is that buyers are doing their due diligence. So they are taking views based on certain assumptions and forecasting what these changes would basically do to their underlying saving under the power purchase agreements in order to bear this risk for the term of the PPA. We know that use of system charges will change. Obviously, it's a key question for all of us when TSO is truly an independent entity. That will be the revenue that underpins that company. I suppose in the market, what we are taking comfort from is the fact that those charges are regulated by NERSA. And I suppose in the market, we are seeing that this risk is either borne by the sellers, depending obviously on the remainder of the risk allocation in the PPA, or that it is a shared risk. So Keith touched on the balancing market and the fact that one party's actions might affect another in terms of what they undertake if they are a balancing market participant. So it's expected that once there's further clarity on this as well, what we'll have is basically indemnities and provisions in the PPAs where basically if one party is penalized for the actions of the other, that they're able to seek recourse. Virtual wheeling, if you can just move to the next slide, Rob.
So Alex, can I put you under pressure to finish in the next 2 minutes? Is that okay? Cool.
Yes. Okay. So let's actually move. This is I'm just going to say this is, everyone's aware of this. This is the traditional wheeling contractual structure. Two important things on the structure, just back quickly, Rob. Two important things on the structure diagram. Your wheeling arrangements with the connection use of system agreement between generator and Eskom, and the electricity supply agreement between Eskom and the customer. Under virtual wheeling, you can go to the next slide, Rob.
You see it?
Yeah. Sorry, okay. Sorry, my computer's not letting me. Okay. Under virtual wheeling, what's important
you can see the next slide.
Can you guys see it?
Yeah, it's
okay.
Up, Alex.
Perfect. Okay, so under virtual wheeling, the key the different change is that there won't be any amendment to a customer's ESA. There'll be a virtual wheeling agreement between Eskom, the customer, or if the model is an aggregator or trader model, between the trader. And through that virtual wheeling agreement, the trader or the buyer can actually reallocate the load that's actually exported onto Eskom's grid. And then Eskom will actually refund the trader or the buyer. And if it is a trader, it would be up to the trader then to obviously, on a pro rata basis, refund its consumers or its customers. It's important to note that obviously Eskom would only affect that refund 1 or 2 months after the electricity is being supplied, which is just something that the market has to be aware of.
Very cool done.
Did I do it in 2 minutes?
That was perfect. Perfect. Your coffee's being delivered as you speak, for thank you. So thanks, Alex.
Okay.
Thank you for that. That was very helpful and nice.
You know, I'll take whiskey, not coffee.
Deal. Cool. Josh, can we put you on?
Screech through.
And you have, sorry, 4 minutes, but I know you're good with
that's
stuff.
perfect. No, I've just got 3 quick slides. Good afternoon, everyone. So I'm Josh Dippenaar from Sustainable Energy Africa. We're a not-for-profit organization supporting municipalities with embedded generation and more recently wheeling. So yeah, let's dive in, Rob. I've just got sort of basically two topics, and the first one is around the billing and emerging sort of wheeling use of system charges approach in municipalities. And there's sort of these two approaches. On the far left bar chart shows full regulated municipal retail prices, which includes obviously an Eskom energy purchase price and a municipal use of system charge, or sort of a municipal surplus. And that's example A. And then example B is the first sort of billing approach. And this is what City of Cape Town's doing. It's sort of what we're calling an explicit wheeling tariff, where you have a price for wheeling electricity. And then the third example C, is where it's sort of following the Eskom approach, where the off-taker pays full regulated retail prices for all energy, and at the end of the month gets a wheeling credit or a rebate for that wheeled energy, all wheeled energy units received. So that's the sort of direction things are going in most municipalities, is to follow Eskom's approach and this wheeling credit method, what we're calling. And then there's obviously the question around time frames, whether this is done on a half-hourly basis or on a monthly time of use basis. And again, most municipalities, bar City of Cape Town, are looking at following example C, this credit method on a monthly time of use basis. Cool, Rob, let's go to the next one. I just thought I'd provide a snapshot overview of progress among municipalities. So many municipalities are sort of varying in their degree of readiness for wheeling. Nelson Mandela Bay, top left, has been forged ahead and been wheeling for 10 years with traders, PowerX and Etana. And sort of between 2.5% and 5% of all energy consumed in Nelson Mandela Bay is wheeled. So huge volumes there. George Municipality, I guess, sort of also forging ahead with wheeling. They've done a pilot for the last year or two with trader N-Power participating in the wheeling pilot. The volumes there are much smaller, sort of 5 to 10 megawatt hours per month. And then City of Cape Town has done their wheeling pilot, which I'm sure many people know about, participated in, and they're doing that half-hourly billing use of system charge with the excess surplus tariff, which is great. And yeah, that's expected to become more operational by the end of the year. And then there's many other municipalities like City of Ekurhuleni, sort of with very good prospects to wheel this year with a council approved policy and a tariff in place. And then at the bottom, I've listed municipalities in a very subjective order of readiness, how we view the readiness. So Stellenbosch, Swartland, City Power, very close to sort of on the brink of wheeling, Umhlatuzi, Msunduzi, Overstrand, eThekwini, B2. Yeah, so progress. Some have made starts, and it's really exciting. There's this sort of emerging best practice among municipalities and a framework of template agreements, and a sort of emerging tariff approach, etc. So all of this and the sort of steps municipalities need to take to wheel are included in the next slide. We've been working with SALGA, the Local Government Association, on a publication called The Status of Wheeling in SA Municipalities, and we'll be publishing this in the next sort of few days to weeks. So if of interest, we can circulate it to the group, and it details the steps municipalities must take to wheel and the progress in municipalities, and hopefully that's sort of a blueprint with when people engage municipalities, they can have this document to reference, and it can sort of clarify the process which municipalities need to take to wheel. So I think that's all from me. Thanks, Rob.
Thank you, Josh. You can also get your drink of choice delivered for doing it in 4 minutes. That was great.
Excellent.
Thank you very much. So
Awesome.
I'm conscious everyone's speed dates at the moment, and on the hour means on the hour. So thank you very much. I think there were a few questions that were posted, and I think there have been some responses there. Unfortunately, we don't have enough time for lots of other questions, but hopefully you will employ the people on this call as much as possible to answer them in more detail. And the people who did register formally through the process will receive a recording of this as well as the presentation once we fix those little glitches that came up earlier. But thank you, everyone. I hope that touched on a number of topics in record time, but I hope you gave people a feel for where wheeling is and the issues that at least us who are at the rock face are seeing. So thank you very much for your time. Hope you have a good rest of your Thursday.
Thanks, everybody. Cheers.
Bye, everyone.
Thanks.
Thanks.